festivities have already begun here. So is the case with the market, with crude cracking even further.
There is a war, but there was an impact.
Yeah.
I'll say it again. There is a war, but there was an impact.
Wasn't an impact.
No, there was an impact because crude went up, yields went up.
Yes.
But I guess within a week, 10 days, I mean, everything is just neutralized. So the message from the world of commodities is very simple, that demand will remain poor. Geopolitical tensions are passé from a demand-supply standpoint, and it is more, and things are now moving in tandem with what the assumptions of the growth for 2024 are. So I'm not at all surprised with the sell-off in crude, but I'm certainly surprised the quantum has been so, compressed that in 86 went to 96, and 96 has now come down to almost $80. So that's really been
below $80 in fact.
That's below
lowest in more than 3 months. And this is perhaps going to be like one of the key triggers for us, right?
No, I want. It is more than a trigger. It is more like a tailwind. Because crude going down means that on the macro front, just when markets were getting slightly worried about the macro implications, I guess crude prices have come crashing down. So crude, I think, is going to be more than a trigger. I think it's going to be a big hurrah for the bulls. And the year-end rally, which I think we've been talking about, everything seems to be coming together. Risk is back. Commodities are down. Flows are normalizing, short sellers are covering the short positions, and the long bias in the market continues. Mid and small cap stocks, well, the index is at an all-time high, touched an all-time high earlier this week, which means that the correction in the mid and small cap stocks also has come and gone. So, looks like we are in for a good Diwali. That's what I can say.
Yeah, though we've been consolidating the past 2 days. The good thing is that the FI selling, while it persists, the quantum has been reducing, at least for the last 2 trading sessions. While you could debate and argue that we barely did anything yesterday, barring a few odd aberrations here and there, it was a very, very narrow band that we were trading in. But yes, the good news is that higher highs and higher lows. So the band slowly is only inching higher, and that gap is getting narrowed. I mean, it almost seems like 2 weeks back when we were sub 19K mark, that seems like history.
So Aisha, you cannot be bearish in this market.
Yeah.
And now it is on your ability to understand risk, you'll have to define your quantum of bullishness. It started with profit booking, then it turned out to be short covering. Now the reverse is happening, which is that short covering led to the mighty recovery last week, and post short covering, the long bias and the long build-up clearly seems to be visible. The broader market is outperforming, and the small cap index has hit an all-time high. So there you go. Fresh shots in the bank nifty, that's the tricky one, but I guess somewhere the short covering has actually started. So I don't think the rebound trade in my book actually is over, and I think the rebound trend may just extend itself for next few days. I still maintain what I maintained, that what we saw in middle of October, late October, was a savage, sharp, and a typical bull market correction. Before you realize the bull market correction has actually started, the bull market correction actually gets over. What I don't like about the market is that IT is still in some kind of hibernation. Reliance is just not chipping in. So now the onus really is with banks. Earnings by and large have been decent. You've got more upgrades than downgrades. So I think that is decent. The data which is coming out on festival demand, I think, will keep the market warm. Just every category we've looked at, just every promoter we've spoken to, just about every data point seems to be indicating that the Indian consumer this time is consuming, and they're consuming how. So if I connect the dots here, global, which is the macro setup, crude, which is down, the bias in the yield is reversed, small and mid cap stocks have come back, earning is looking okay, and the festival indicators are indicating that demand now seems to be really moving in the right direction. When you have so many factors put together, what do? You don't sell. You stay put. And I think that is what you should do.
Okay, strategy is really to stay put and capitalize on all of these factors that are coming together. And in fact, when you look at the overall global markets as well, it's noteworthy to understand the fact that yesterday, while it might have been a muted session, the S&P marked the longest winning streak since 2021 at 8 straight days on the trot. Nasdaq as well eked out a 9th winning day, its lengthiest positive session in the last 2 years. And you also had the Dow Jones that snapped its 7 straight days off again. For the most part, Asia's positive this morning. But pharma, yes, indeed, talking a little bit more about that sector and just look at the performance that we've seen within the entire pharma space on a year-to-date basis. And it's been pretty stupendous in terms of the return. So the question is, are we seeing a structural turnaround within the pharma space, given that generics may be flat, but injectables as a business overall, Nikunj, is growing?
See, pharma is a cyclical sector. I don't think we can use the word, structural for pharma. That I think, markets have realized the hard way that there's nothing structural about pharma, even though the need for pharma could be structural. Within that structural, big picture argument, there are a lot of small, factors which are at play. Not every category in the pharma has made a comeback. So generics are flat, but injectable, which is companies which are making injectables, that's where the change is. Companies which are in the formulation, that's where changes are coming in. So I guess the setup is very simple, that companies like Lupin, Cipla, Dr. Reddy, and to some extent Aurobindo Pharma, some of these companies I think are in a sweet spot. And typically with pharma, when the cycle reverses, it really is going to be a 2 to 3 year cycle, or it could be 18 months to a 24-month kind of a cycle. So looking at what they delivered last quarter, the leverage, the operating margins, how things have moved in terms of market setup, it's easy to imagine that for pharma, I guess not for every pharma company, but yeah, for select large cap pharma companies, I think there is pricing power which is coming back. It is typically what we saw, let's say, what happens with, what happened with banks. When the recovery happened, it started with large banks, and smaller banks, they chipped in. Now within pharma, I think it's the large generic focused companies or US focused companies which in a sense are at a cyclical uptrend. I'm not so sure whether the tide has turned for the entire pharma sector per se, and that's where I think I want to just point out that right now for next couple of months, I think large cap pharma is the trade, mid cap pharma may not be the trade. So if you're buying pharma, you should still stick to the portfolio of large cap pharma rather than treasure hunting in the mid cap pharma. I don't think we are in that cycle that, okay, large cap pharma is going to buy mid cap pharma is going to go to small cap pharma. The cycle will prompt you to do such things. But fundamentally speaking, not every pharma company would benefit. It's like COVID time, every pharma stock got re-rated. This is not that, purple patch where everything gets re-rated. Look at IT, not every company's got re-rated. Large cap is down, small cap is doing better. Look at banks. Large cap banks are doing better, small cap banks are not doing well. Within pharma, I think the same thing is at play.
Okay, but taking stock of the year gone by, and it's not actually our market which has been the best performing. It's actually been the beaten down Eurostock 600, which actually has done a lot better. While that has been topping the charts with a 28% return from last summer to now. There's Nifty with a 9% return, and real estate being the firecracker sector, along with, of course, small caps, which have given you on an index basis 36% return.
So Aisha, you analyze the year gone by for market. Now the year gone by for the market actually was largely a global comeback, while Indian markets, they piggy banked on it. What was the highlight for the year gone by? The first, I guess the Samvat year gone by in my book was the first year of no COVID, was a clean year, which is that the COVID effect had waned away, and the effect of the stimulus which central bankers had adopted in order to stem the economic fall, that also completely waned away. So in my book, this Samvat year was the first year both for global markets and for Indian markets where you did not get a large stimulus push. But the gains, I guess, were completely dominated by unexpected sectors, and the outperformance in the small and the mid cap stocks, I mean, it is touch wood, it was just too unreal. The year gone by did not see large wealth getting created by any of the big, corporate billionaires. However, the number of IPOs which went public, the number of new billionaires which moved from small cap to mid cap and from mid cap to large cap, I think for me that really was the highlight. You saw comeback in autos, but an extension in real estate. No return in banks, but a year when IT in a sense got completely challenged. The year gone by in a sense also, if you ask me, was the first big year in, I could say that it really cemented that Indian markets are no longer a one-trick pony. The force of power, I think, has changed, and that is what last 1 year has demonstrated. FIs were selling, large cap stocks did not do well, but DIs were buying, HNIs were buying, IPO market was vibrant, small and mid cap stocks, they went up. So frankly, if you ask me, the learning for me in last 1 year has been that FI चले गए जाने दो, DI यहाँ पर है, वो important है.
Yeah. You're just looking at some of the mid and small cap gainers, and who would have thought it would be these names, right? There's Fact Nikunj, which is actually scaled up 520% from last somewhat to now. Of course, needless to say, there are a whole host of those defense, shipbuilding, railway names. RVNL 332% return, IRFC 245% return, Mazgaon Dock 214% return.
Now,
and I'm not even talking about Abhi Suzlon, BSC, Kalyan Jewellers, etc.
But the first four names you said, let's put them under one basket, and that basket is PSU.
Yeah.
They're government companies, and they were the ugly ducklings before COVID. I mean, nobody even Mazgaon Shipyard or Kochi Shipyard, even if they existed, nobody cared. They, in a sense, were really the horsemen, so to speak. So PSUs, the ugly duckling, have suddenly become the swans, and that's how markets are. You have to understand that cycles are at play, and the cycle at play right now is really favoring PSU stocks. Next 12 months would be very different for them, because next 12 months we have elections, and decision making ahead of election has to stall. So the kind of momentum, the kind of order book, the kind of comfort what markets are derived, given that India is going to be becoming more defense, Atmanirbhar in defense, which is evident, and railway is going to be a sizable capex. A lot of those views now will be tested. Why? Because decision making post the budget is going to get stalled, because the country moves into election mode. So it would be interesting. It is a great year, but it would be a very different year in terms of an approach, at least for some of the large government dominated stocks. That's one part of the story. Second, look, small and mid cap stocks are not cheap. You cannot have a situation that tail is going to wag the dog for long. Ultimately, the large cap stocks have to go up. So it really, what we are discussing this Samvat year versus what we may discuss next Samvat year, assuming that markets like the political verdict, it really could be a different verdict. It could be a graph which will say large cap has made a comeback and small cap stocks have underperformed. So I will not be surprised that we may have a mirror image of what we have this Samvat year versus next Samvat year. But yeah, I was looking at some very interesting data. What did well this year? Tomato or Zomato?
Well, both had volatility, but on a net basis, Zomato finally won.
What do you think?
Yeah, I think
Tomato
both.
or Zomato?
Both.
No, what did better?
Zomato.
Zomato. Kunal?
I think first Tomato and then it was Zomato.
No, what
Yeah,
did
that's
better?
what I said, na? Volatility
What did
on
better?
net basis, Zomato.
Zomato, of course.
No. Tomato prices. Tomato prices went higher than Zomato prices. Now, Zomato has given more than 100% return. I was looking at data yesterday.
Nikunj,
That's
tomato
the data.
prices didn't hit 100 plus. I can vouch for it.
From 40 to 200 tomato. 40 to peak. See, I'm talking about peak.
200?
That's what the mandi wala used to say.
I don't know.
200 rupees.
I don't think so, but anyway.
You've not been shopping now.
I have been, which is why I'm saying I don't think so.
Maybe you have
She's
some
been ordering
influence.
on Zomato, that's why.
You have some,
Link it.
You have some influence with the sabji wala.
Maybe, yeah.
So 40 rupees. Can we have the graphic back, please? Zomato went up by 163%. So it gained, let's say sub 100 or sub 40 rupees. It went to 100. It went up by 163%. But tomato during the same price actually went up from 40
So
rupees.
what did you buy? A kg of tomato or one stock of Zomato?
Well, I bought a kg of tomato and no money was left to buy one stock of Zomato.
Good one.
Good comeback.
Okay,
But this year, guys, think about it. You would first buy onions and then cry. Now everyone is crying before you're buying the onion. So let's see what happens next year.